Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, May 26th, 2011. This morning I'm talking about China to the rescue, and at least that's the theory that's being floating around, or the hope, or the sentiment, or the rumor, or call it whatever you will. But that's what people are talking about today. That perhaps China is going to step in and they're going to support some of these euro bond issuances, even though we know what the chance of default is in some of these regions, and what's going on with the total debt crisis over there. But China, if they step in as a backstop, I mean, let's face it, China's got so many large currency reserves, all right, that they could stand to throw a little money that way. Listen, U.S. Treasuries aren't looking like the hottest thing to invest in, and at the end of the day, their sphere of influence they can increase, and of course, they can help stabilize the situation for a while, because it's in China's best interest to make sure that the global economy moves forward and that the Eurozone's still intact. So, it's sort of like, people have kind of throw this out every once in a while when things look bleak, but, it's hard to say what's going to happen. I mean, will China come in, step in, and if so, what kind of interest rate do they need to get this done? I mean, is it going to be something that's sustainable for the Eurozone? So a lot of questions going on today regarding what's taking place there, but you can see Euro is higher on the news, all right, and it's trading higher against most of the others, with the exception of the Kiwi. I'll show you that one in a second. But look here, Euro. You can see 140 was that bottom area. Looks like it put in, tried to do a double bottom, tested the support here, and boom, we're moving up a little bit higher now, just shy of 142. So that looks like perhaps we could be in for a trading range this summer, perhaps 140 to 150, as long as things don't get worse here in the Eurozone. But to be honest, it totally makes sense. China sovereign funds should step in. At the end of the day, they've got so much in currency reserves that they may as well waste some of their dollars on this. So, I hope to see this happen. Help stabilize the situation. All right, just take another look here. Looks like the pound just jumped a little bit here. Okay, we've got the pound is mixed to mostly higher, and they had a consumer services sales index came in, and it came in less than expected. So it's just showing that the fundamentals are still a little bit weak in the UK, but we're starting to get to these little nitpicky data points for the UK. That's really we're at that point where they either need to say, listen, we're going to do something about interest rates or not. I mean, the longer they let this thing drag on, the worse it is for the consumer psyche out there. And now yesterday, the pound had a decent move because exports were much higher, which is a good thing for the UK. Okay, but consumer spending was a lot lower. And, you really need the consumer to participate in the economy in order to, have a little bit more strength, in economic recovery. And the problem is that the longer these central banks wait, I mean, you can see it. It happened in Japan for 20 years of the lost, the 20-year lost decade. All right, you're starting to see it here in the U.S. You're seeing it in the U.K. that as central banks keep interest rates low, all right, there's no incentive for anybody to really move and do anything. There's just this malaise where you're sort of sitting back and waiting and saying, okay, what's going to happen next? Rates are still low, or is my house price going to go back up at this point? And if it doesn't, what am I going to do? That means if prices aren't going back up, then I certainly don't want to get into it. Why would I want to buy things in this economy if I feel that prices are declining on their own? So it's the kind of thing where sometimes they may need to move off of these extraordinarily low rates. Now, I know the argument about rates and rates go up, asset prices like homes go down, and by and large that's pretty true. But if you think about how low these rates are and historically how low they are, I don't really think you've got a good aggregate sample of data to say, okay, listen, this is what's going to happen. I mean, listen, I've been saying it all along, but I'm starting to question it and say, wait a second, you know what? These rates are so low. What happens if you add another 25 basis points? I mean, does that really, have everybody running for the hills? Well, no, it doesn't. It just says, listen, we're on top of the situation. Things are getting better. That's why we're raising rates. That is how you encourage the consumer. All right. Central bankers, though, are unfortunately, textbook geeks and not really real life people. So, that's part of the problem we see there. You can see that. Let's see the Kiwi. I wanted to show you that one. Kiwi's higher. pulling up with just shy of 81 cents here. And you can see right here, I'm going to show you this one. We don't look at these crosses too often, but I just want to point it out here. This is Kiwi versus CAD. All right, so this is the Kiwi versus the Loonie, and you can see this thing's been moving just pretty much straight higher. If we look at it on, I don't know, let's say a 2-hour chart, all right, you see it's in a nice uptrend. And basically what's happened is that inflation expectation report the other day really shifted money flows. So a lot of people were thinking, hey, Canada's probably going to be the next major country to raise interest rates. Well, based on that inflation expectation, it looks like people have changed their mind, and now it is people betting on New Zealand to be next. So you see money leaving Canada, moving towards New Zealand. And of course, a little bit of the oil sell-off has also put a little bit of weakness on Canada. So we're going to have to see what happens with their with their economic figures and how their growth is doing. All right, so we've got risk taking going on a little bit. We've got the Aussie higher as well. All right, we're back just under 106. All right, we just made this move higher from under 105. Okay, so we've got a little bit of risk taking to start the day. Now we're going to have some news out this morning in the U.S. We've got GDP revisions which are coming out. They're expecting a revised 2.2% growth in the economy for the quarter. Okay. We also have personal consumption figures. Now this could be an important figure as well because we know that consumer spending represents some 70% of U.S. economy. So if GDP figures come in, as expected, but consumer consumption is down, all right, that could mean that perhaps government spending is up or one of these other areas, which is a net negative. Okay, we want the consumer up, we want government spending down, we want to see positive growth in GDP. All right, we don't need to have world-beating growth right now. All right, but we just need to get the government spending portion of it out of there. All right, we also have continuing jobless claims and initial jobless claims. I'm still expecting over 400,000 for the initial jobless claims, so that's not too great. Okay, so you can see that dollar's weak to start the day, and it's even weaker versus yen. All right, we're just down below that 82 area, but I think we're going to keep trading this range above and below 82 here. Now tonight in Japan they've got CPI data which is coming in, and there's actually expecting to see some gains in CPI data, which I can't recall last time I've actually seen gains in Japanese CPI. We know about the deflation that they've had there. So while they're trying to encourage some inflation there, and obviously this isn't going to do anything to affect the Bank of Japan, all right, it may be a situation where they could potentially get away with some sort of intervention, or not intervention, but monetary easing, I should say, where the expectation would be that they should be tightening rates, and maybe they loosen just to try and get that economy moving a little bit more. So that's really what we're looking at now. China to the rescue makes total sense. They should most probably do it. Why not? I mean, it's like you're taking a portion of your total overall net worth and you're putting it into something speculative. Sometimes you need to do that to have the really big gains. It's kind of like, I was watching this thing about some of these new tech IPOs that are coming out that, a lot of guys got into them, very low entry prices, and now they've got stakes worth, hundreds of millions of dollars. And, it's the kind of thing where you just take a small portion, you put it to something that seems speculative, and perhaps, there's some reason for gains there. And you know what? That's kind of like what we say about the currency market as well. If you think about it, no one's ever said, hey, take everything you own and come fire it into this market. But this is definitely a market where you should have some exposure because you can make outsized gains. And if you take just a small portion of what you have overall, commit it to this market, you may find that it does better than the rest of your overall portfolio. So I hope the Chinese are going to make that decision and that things stabilize going into the summer and we can get back to the business of growing the global economy. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.